Hey, what's up everyone? Welcome back to another Elliott Wave analysis. Today we're diving right back into Bitcoin, and in this video I'm going to be continuing right off from where we last discussed about this potential large correction we are currently witnessing, and more importantly discuss how far this correction might go. But just very quickly, if you haven't already, please make sure to like the video and subscribe to the channel if you haven't already. If you would like more Bitcoin and altcoin updates, it really does help. Thank you very much, and I appreciate your support so far. So starting right off the bat with our first primary scenario that we have been discussing, I've mentioned previously that we were working in a very high potential possibility to work for a larger degree wave 4 to the downside. And we've discussed this idea of was working for a deeper wave 4 based on the idea of what is known as the guideline of alternation. And for those that are new, I know I'm going to sound like a broken record player again. The guideline of alternation in the Elliott Wave Theory basically refers to the tendency of wave patterns to alternate in form or structure when they occur within a sequence. It typically applies to the corrective waves in an impulse wave sequence or to the corrections within a larger corrective pattern. But since we're working in impulse wave, we're going to be working with waves 2 and 4 for this example. So basically in a 5-wave impulse structure as we have here, the two corrective waves 2 and 4, they will tend to usually differ in style. Now, this is a very hard guideline to actually prove in real time, but it has been observed in the markets enough for us to prove useful to apply and kind of assume what kind of style or pattern might happen in terms of the correction depth and pattern style. So for example, if wave 2 is a sharp or a zigzag correction, wave 4 is more likely going to be a sideways or a complex correction, such as a flat or a triangle variation, and vice versa. If a wave 2 is sideways, this wave 4 is most likely going to be observed as a sharp correction. But more importantly, I think a lot of people are asking, why does the alternation get continuously observed more often than not? I think it boils down to two main ideas. And the first one is just based on the structural balance of the wave counts. The alternation helps us maintain the proportion and symmetry of wave patterns, and it makes the market's movement more fluid and less repetitive. You will usually not see 2 sharp or 3 sharp or 4 sharp corrections happen consecutively, and that's why we have to work with the structural balance. And that goes back to the idea of market psychology, since the Elliott Wave Theory is rooted in crowd psychology. It's just basically how it works. And the alternation reflects the natural flow of sentiment within the market. And after an intense or even a sideways structure for a wave 2, and in this case, since we observed a sideways wave 2, we are assuming that the market is less likely to repeat the same behavior and will tend to balance the overall movement. And that is why we assumed that this was going to be a sharp correction. And we also saw that based on this initial move to the downside as a very strong impulse to the downside for this wave A. Now, this actionary wave is usually the biggest giveaway in terms of how or when or why the alternation might actually come into play. And since this was quite sharp and it retraced quite a bit, actually, if you look at it, it retraced around 15%. And that enough was a dead giveaway to me personally that this was working into a wave A instead of some kind of completion of some kind of larger, different type of style correction. And basically, the actionary wave in the Elliott Wave Theory, it's the wave that moves in the direction of the main trend. And in this case, the counterpart trend, we were looking for the overall correction to play out. So the actionary wave, this would be the wave A. And it moves against the trend as well if you're seeing this as a reactionary wave for a wave B. And then now we're working for the last actionary wave for the wave C. So that is how we're seeing this drive the market forward based on this. The overall structure of the trend on the larger time frame, this would be the reactionary, but if you're working in a zoomed in time frame, this would be the actionary wave, and that was a dead giveaway for this being the wave A. And now looking like this is the completed wave B, because we did talk about this as well, that this B wave was also possibly coming into play based on the major Fibonacci levels from the 38.2% all the way up to the 61.8%. But in this case, we didn't hit the 61.8% on target, but we did hit the 50% of Fibonacci level. Again, 50% is not a golden Fibonacci level. It's not the square root function of anything. It's just half of what the retracement is based on this move here. So That is why it is a little kind of odd to see it just reflect a rejection from that 50% level. But very interestingly enough, this B wave played out quite nicely in itself as the structure in itself, basically. We saw the ratio of wave A of the wave B equal in length for the wave C. So that is hitting exactly the 100% level at the 99,700 level. That hit perfectly on spot at the 50% level. So it does give us quite a bit more conviction and helps us with the evidence-based approach that this B wave is in, and we are now working for that C wave. So this here, again, this B wave can be turning into any corrective structure. So that leads me to basically two boiled down ideas at this point. So if we zoom in, this idea, we're not changing any of the structural integrity of this wave A. This wave B, most likely to me personally, is in, and we may be working in a series of 1-2s, meaning that this may be a 1-2, 1-2, 1-2, and we may be working for a series of 3-4s to eventually come down to this region over here, meeting this demand zone. And most importantly, if that doesn't play out, since we are also working correctively and we're not finding a true impulsive nature to the downside at the current time of recording, this can also technically be a WXY, meaning that this is an ABC, WX, and then Y going into that, making this a multiple zigzag correction. And if that is the case, that has to be boiled down to that this B wave could also still be working in play as a flat idea. Since we do have this as an ABC, we can say that this is also a 3 wave, and then we would be looking for a C wave to the upside, and then that would also meet us down similarly at the same levels around this level. And again, it doesn't really matter, because even if we do come up for a higher wave B and we do range for a bit for the next few days, I still think that we're going to be working for a larger wave C to the downside to eventually complete this larger 3-4. I think that this initial move to the downside was enough for us to say that the markets are ready to take some profits at these levels, and that's what we got. And I think the markets are still a little bit spooked out. I don't think that they're finding enough conviction to have another move to the upside. Of course, we could be wrong. We can just say that this could be working up to the upside, but again, I can't find a real impulsive nature off of the lows here. And plus, it broke this previous low here anyway, so this can't be a wave 1 anyways anymore. Meaning that this can't be a wave 1-2 since it broke this termination point. So yeah, that is how I'm seeing this, ladies and gentlemen. We are seeing this possibility of an ABC continuation to the downside. I still think that this B wave personally is in at the current time of recording, but again, we can be working for a larger wave B. That would fit the overall idea in terms of the time, because this wave 2 was quite long in time as well. I still think that if this B wave does play out, I think that this C wave is going to be sharp enough to kind of meet that demand, or the kind of expectation that it's going to be meeting us for that wave C being a sharp correction. So that is how I'm seeing it. But in my opinion, like I said, I think this B wave is in. It did meet that ratio of that 100% level for this internal wave ABC. Again, this nested 1-2 is just we have to wait and see how this plays out. Now, what about the overall target for this wave C? If this B wave is complete, I am expecting, based on this retracement here, to equal the length of this retracement here as a minimum expectation. That means that this 100% level already measured for you guys is around the $85,000 level, and most coincidentally, very structurally important, is that we're seeing this 100% level meet very nicely with that lower demand zone with this zone over here, and that is pretty much the last resort of support. Now, that doesn't mean we can go deeper. We can go deeper because this wave C, based on the ratio, we do see a tendency for deeper wave Cs, and even a common target for a wave C is the 161.8% level, which is around the $77,000 level, and that could be a strong wick into that level if we do break this level. But again, this wave C can end anywhere between the 100% and the 161.8% in terms of the Fibonacci extension tool. And more importantly, we don't even have to reach the 100% level. It could even end around the 61.8 level. That is the least common target for a wave C target, but it is possible. Again, all we're looking for is what kind of clues and hints is the market's going to be giving us in the next week or so on where the possible potential support may be. Again, I don't think Michael Saylor is going to save you. I don't think Elon Musk is going to save you. I don't think anyone's going to save you. The only person who can save you is yourself, and whatever Elliott Wave or technical fundamental analysis approach that you're taking into the markets and approaching it with your own way, that is the way it's going to be for everyone. And that is why this market cannot be beaten other than by yourself. So yeah, that is how we're looking at it. Overall summary for this video is just really nothing new. We're looking for this wave C to the downside as the expectation. It doesn't have to happen. And then again, based on the idea of alternation, if you're still new to it, go back and rewatch this video. Very interesting, another added note is that we did observe almost perfect alternation occur within even the extension wave of this wave 3. Within the subminute and the primary degree, we saw a sharp correction for this wave 2, a sideways wave 4 here, a sharp wave 2 for a primary degree, and then a sideways primary wave 4. So again, the observation, ladies and gentlemen, in hindsight, it works very, very well, and we can just say it either checks off or not for alternation. But if we're seeing it enough happening even on the smaller degrees, we're still going to be expecting this larger wave 4 to be a sharp correction. And again, the evidence is racked up based on this actionary wave in itself being a 15% correction. And we're also seeing some divergences being created on the daily time frame. We're seeing some bearish divergences, and I don't think it's ready to complete, and it's still in the neutral zone now after we got this initial pullback, but I still think that we need to reset the RSI in that case as well. And then once we start to see momentum divergences, the RSI divergence, bullish divergence rather, more specifically, we want to see that within the C wave. Usually you'll see between the waves 3 and 5 for how the C wave completes, and that's usually the biggest sign for me that some kind of reversal pattern might be coming into play. Most importantly, how this demand zone is going to be coming into play as well. Again, we have a lot of ways we can see how this wave C is going to be playing out. Again, to summarize, this could be turning into a structural wave 1 2 1 2 1 2, and we're now just looking for a series of 3 4s. Either that or the B wave is going to be ending at a higher level, and then we'll see that sharper correction, which is absolutely fine. And then again, I think one last opportunity could be if this is the WXY, this could be turning into some possibility of a diagonal, but again, a lot of people are going to hate me for this because the subjectivity behind it, that idea is also coming into play as a possibility if we're going to be continuously working structurally as a corrective pattern to the downside, and that in itself will be that motive wave of 1 2 3 4 5 for that wave C. That'll be the diagonal wave for the C, hopefully as a contracting diagonal because that is the most common one, and then we will see finally this ABC being complete, and we're working for higher levels. So this is good news, ladies and gentlemen. You know, for the past few weeks, I've only been sharing some bad news, but it is what it is. We have to get the bad news out of the way if it's actually right in front of us. But we are starting to see the light at the end of the tunnel, and we might be working for a higher level very, very soon. Within the coming month or two, I think that we will see a larger wave 5 to eventually complete. And I think at that point, I think there is a very good possibility that this is going to be the end of the bear market, or at least in anticipation for a larger corrective move, whatever degree that you may be looking at, but that is saved for a later date. And again, if you guys are interested in the Discord membership, I do share all of the play-by-play moves that I currently show and what is on my mind, the sentiment and so forth. I also go and dissect on how these internal waves are structured, how this B wave was structured. All of that is in our Discord membership. So if you're interested, the link is in the description below. Please don't hesitate to contact me. Also, if you're interested in the Patreon membership, I only do 2 updates on there as well. It's a little bit of an easier way to gain access and to just kind of get a taste of what the XForceGlobal membership could be offering. So yeah, the Patreon membership updates, we do Wednesday and Fridays as well. So that is also another way to try to get into a more exclusivity of how XForceGlobal functions. And again, hopefully this was helpful, ladies and gentlemen. Be safe, trade safe, have a fantastic New Year's, hopefully a safe New Year's as well. I'll see you guys in the next video. Thank you very much. And make sure to subscribe to the channel if you haven't already. Like the video. I'll see you guys in the next video. Bye-bye.